how fast is it to send money across crypto? If I was to send USDT to someone randomly here, in Bombay and give you $1. By the time normally the statement and account that is how fast it is. And that's not over exaggerating, that's just how things are. And then mobile money is also very fast. Actually, I think a couple minutes to exaggerate, it's also in seconds. Unless there's a downtime. And that's when Papa on a Friday at 2 a.m. wait up and enter bill. That's the time meets on the more final upgrade. And now you think you cannot make a payment, but even that also happens in a few seconds. Fintech apps also, depending on which one you're using, how good their integration is, between a few seconds, hours, sometimes days as well. How many pesa mingi? Money transfer services takes a couple of days, depending on where you're getting your money from. Banks takes 1 week. I'm even correcting that. I have tried sending money from Kenya, my AXA. We have AXA in Kenya. There's AXA in South Africa. Tried sending money from AXA. It took 7 days to pick up AXA in South Africa. You know what is funny? When I make a transaction with my AXA card, napigiwa na customer care South Africa. Hiyo wanapiga haraka sana. Kukwambia, are you the one who's made these transactions that you can go through? Which means, wanaona hiyo system ni moja. Because if I make my payment from AXA Kenya, napigiwa na South Africa, inamaanisha system ni moja. It's the same system. So why is it that when I'm sending money, suddenly, it's not the same system? Suddenly now, AXA Kenya doesn't know AXA South Africa. You know, it has to go through Swift, or go through any other. Right now, there's PAPs. Good question to ask, because that's where things are today. So, what exactly are we trying to solve when we say that crypto can be an enabler within the remittance space? We go to the next screen, please. One, before we even look at this, I'll just go straight to the recommendations and then I'll refer back to the screen. One of the biggest ways, and that's why I've been referencing crypto operators, not fintech operators within the room, because we really do this in the background, right? Those of you who run B2B platforms especially, you know very well when a customer says they want to make a payment from Tanzania, they want to make a payment in China. What you first do in the background is you take the Tanzania shillings, you go look for a liquidity provider, convert the Tanzania shillings into USDT, and then send that USDT to China. And then there'll be another player, what bankers call corresponding bank, in this case a corresponding fintech, that will now receive the USDT and pay out the yen in China. We'll make another payment. So essentially, we can look at crypto as a swift replacement, right? Because that's exactly what in this particular case it's doing. That's exactly what the crypto network is doing. There will still be needed for intermediaries and correspondence in the middle, but the difference here is in the speed, hence why the first screen is showing how fast and much cheaper it is. So now imagine if regulations allowed, if we could have UBA Bank, for example, be able to build on top of crypto. AMSA was the example I gave, building on top of crypto. So now, sending my money from AMSA Kenya to South Africa doesn't need them to think of how they balance their books. You know, going to the marketplace with Kenya shillings, looking for someone who needs that, and vice versa. Someone with SAR who needs Kenya shillings so that they can be able to fulfill my simple transaction. In this case, it will work very simple in the background, whereby we have a digital marketplace similar to what we have with PAPs. For those who don't know what PAPs is a very good initiative, a very good innovation, whereby banks have their own marketplace and other fintech players, the private marketplace for financial institutions, where a bank comes and says, we want to convert our Tanzania shillings into Ghana cedis. You know, another player says, oh, I will take the Tanzania shillings from you because I need them, and I'll give you my cedis from my reserve. It's essentially a marketplace for those who are in the crypto, how P2P works, right? The P2P marketplace. You go find the highest bidder, whoever wants your USDT or particular Tanzania shillings, or vice versa. So PAPs have built a similar thing. The proposal that we have here, and a call to every financial institution in the room, is what exactly is stopping us from including stable coins into such kind of a marketplace? Whereby now, instead of just dealing with the fiat side, how it simply works is you have your Tanzania shillings or UEN, you want to send them into Nigeria as Naira. In the marketplace, you'll be able to post via API and say that we have X amount of Tanzania shillings that we need to convert into USDT. Instantly, the API matches that ask with the buyer on the other end, and the transaction is completed in seconds instead of it taking hours or days. This is something that can be done. This is something that has been done. This is something that, you know, the likes of Yogu and Nala and other fintechs in the room have been doing in the market. I know there's always that question of, oh, regulation and all of that, but the beauty of that is sometimes it's okay for regulation to follow innovation. Sometimes it's okay to ask for permission before you do something. And the thing that fintechs love is to apologize after doing it. You know, you were in business for 3-4 years, eventually central bank comes knocking and says, hey, you know, finding here, what has been going on? Now you tell them, sorry, we've been keeping the records for you. This is how the industry has been moving. But anyway, back to what is on screen. The biggest hurdles that comes to crypto, even from regulatory side and even from big banks and institutions, is consumer protection. As I mentioned, there's a lot of volatility within the Bitcoin space, and for a lot of people, crypto means Bitcoin. They can't differentiate or do anything else. So there's a lot of education that needs to be done. Education at this level, education at board level, you know, Nakalisha executives or banks training, education at regulator level, explain to them the different kind of cryptocurrencies that you have, and explain to them the need also for local stablecoins. Because one of the biggest risks that come when we talk about regulatory clarity, again, in the interest of time, I promise I won't take too long, is that the regulators are worried if we accept dollar-backed stablecoins, what happens to our currency? If I allow you to save in USDT, you might not need the desk anymore, right? So what we are seeing is a policy problem, whereby already our economies suffer from dollarization, where there is more demand for the dollar than our local currency, TZS. And we are seeing this being replicated even in the crypto space, where there is more demand for the digital dollar, and no one wants to hold the local currency. So the solution to this is, step one, we need to also think about how do we have our own local stablecoins, and how do we have an intermarriage between a global stablecoin like the USD backed stablecoin and the local stablecoin. One of the ways that plays in remittance is, if it comes from the central bank of Tanzania, where they say, hatuna shida na wewe kureceive USDT. Lakini, the moment you receive USDT, locally, the player, the exchange that is giving you this service, has to hold equal value in Tanzania shillings as a token. So if it is a virtual stablecoin ya Tanzania shillings, equal value yake, they have to hold it. That ensures there is continued demand for the local currency, hence protecting the sovereignty of each country. And again, that's a conversation to have with regulators. As industry players, gazeti kusonga, watatupata tukienda. For education, again, it's also about making sure that your consumers, especially for those of you who will be dealing with B2C, Then, and earlier on in the day, someone mentioned that, I forgot the name, but someone mentioned that the weakest link in security ni nani? Customer. Wewe mwenyewe, you know the weakest link. Because kuna scammer atakupigia kwambia ametuma pin kwa simu yako, umsomee. And you know very well utaisoma. Pesa ipotee, uende wanze kupigia simu kwa mix, ukiwaambia nyinyi ni scammers kwa sababu umepotea au ni platform. Na ni wewe ulipeana pin. So the weakest link is always the control. It's not even the system. That's where the largest portion of education is. And even as Binance, we have a platform for education to educate anyone, whether you're a Binance user or not, on crypto. From what is crypto, all the way to doing transactions, trading, to buying, all of that. You can simply Google Binance Academy or go to academy.binance.com for you to start your journey, for those especially who have no idea how crypto works. And then regulatory clarity, we're just having a quick conversation about how regulation shift can really affect a whole industry. Right now, I'm aware that there is a sandbox, a crypto sandbox from the Central Bank of Tanzania, which is a very good move. Because what has happened now is that regulators have seen we cannot continue ignoring this thing. We know you guys are using crypto. We can't continue ignoring it. A few years back, what used to happen is kulikuwa na cautionary notices na tumo kwa banks. Don't touch anyone dealing in crypto. But now we are seeing that change, you know. Central banks are coming forward and saying, okay, we will not say do it easy, but we are saying we are willing to listen to you. We are willing to learn from you. Hence the sandbox. And whoever has been lucky to get to the sandbox in Tanzania, interested to get. We see how we can at least do some regulatory sensitization and also some business. Then seamless user experience. There was a lot of conversation earlier on about KYC, especially cross KYC within the continent, so I'll not get into that. And then financial inclusion. To a lot of us, financial inclusion means bringing the people who don't have banks or digital wallets into the system, right? That is what a lot of us see as financial inclusion. But the example that I gave, whereby I cannot use my card to pay in another African country, am I financially included? I am not. So there's another angle of financial inclusion. And I know for the founders in the room, when you're raising your money, you have to go and say, you know, we brought 1 million new people who didn't have wallets into the system, now they have wallets. Which is well and good. But you yourself, you've been digital for 10 years, but you still cannot make payment in Nigeria. Are you included?